Welcome to the Core Experience, your connection to community, business, and the people who make it all happen with your host, Brandon Souba.
Well, hello, everybody, and welcome back to the Core Experience. This is another mortgage-focused podcast. We did one back with Jack, and we talked about the rapid track, and that's a great advantage for a lot of people to get a quick approval on a loan. But we're going to really focus in a little more on the community here. First-time home buyers, some programs that we have. And again, if you want to see who I'm about to introduce, check out our Core Bank YouTube page, because we put the video out on this, not just the audio podcast. And if you want to see me, I have a suit coat on. So I'm dressed real fancy today.
Yeah, you are. You're sporting the coat.
Thank you. I appreciate that. Now, for the listeners today, I'm going to give you one little bit of a challenge. My guest is Brandon Fowler, and I am Brandon Souba. So this is literally the Brandon show. And this happens kind of often, I feel.
It does. It comes up more often than people probably think. But man,
yeah, as we're out there networking and everything, we're like, oh, this is Brandon. This is Brandon. And then we have a third Brandon who's not at the bank. And every now and then he's with us. And then we keep saying, yeah, this is Brandon.
Makes introductions easy, but makes communicating later a little
different. to who is who. But obviously our voices sound a little different. So you'll recognize. And on the camera, we don't look the exact same. My beard's a little fuller than yours, and I think you've got a couple years under my age. When I say a couple, I'm thinking I'm 20, right? About 20.
Just a couple.
You 25? Is that how old you are nowadays?
No, I'm 28.
Oh, I'm so proud of you. So proud of you. I turned 40 this year, so.
I know, it's a big year.
It's a big year for me. It's a big year. All right, so like I said, we are going to talk about mortgages. I have Brandon Fowler. Brandon, tell us a little bit about yourself. You're at Core Bank. I'll give that one away, but give us the quick notes on how you got to be a mortgage lender as of today.
Yeah, for sure. I've been with Core for a little over, or coming up on about a year and a half now. So, but I've been in the finance space really ever since I got out of college. Okay. So I did personal loans straight out of school, wanted to dabble into the financial advising space. Decided it wasn't for me and then ended up back doing loans just in a different line, different programs. So, so I've been in the finance space for about 6 years, give or take a few months. So
good.
It's been a great fit.
Well, and mortgage is its own beast. I've said this a million times, but any knowledge in the finance world coming behind it, it's helpful. It's helpful, but you could know banking inside and out and still. Well, let's not lie. Even being in mortgages for a year and a half, you still learn something new every day, don't you?
Every single day. I can't say that there's been any couple of loans that have ever been the same, and something new comes up each and every time, but it's a growth opportunity. Every person you interact with is an opportunity to learn more. That's something I thoroughly enjoy about being in mortgage.
Well, good. And we can use this podcast for your newer home buyers too, so they can get a little quick learn on all the different options out there. Of course, as you're building that relationship with them.
Yep, absolutely.
So we are celebrating, and we were debating on this. It took me 7 presidents to figure it out, but I believe George Bush officially made June as the National Homeownership Month. And here we are in June, also my birthday. So this is the month I do turn 40, by the way.
All right.
And so we're going to talk about how does homeownership create wealth? And I've been to a lot of networking events, and I've been in groups. And I remember the real estate agents talking about, hey, I'm looking for a referral. Anybody that's having a kid or just got married, and it's a great time to buy a house or upgrade and all this. And all I was thinking, I was young at this time. And all I was thinking, like, I just got married. I don't have any money. If I have a kid, I even have less money. It's amazing how things panned out. We ended up getting a home. We had the $8,000 tax credit, which was way back when. So it is funny, but there is a lot of opportunity in building wealth within a home. So can you break that down for us a little bit?
Yeah, for sure. And before I kind of get into some of the details of what I have prepared for today,
okay.
I use a source called Keeping Current Matters. It keeps things on a national scale, just market trends, different. All the information could apply. Just keep in mind that it could be vary for being in Nebraska,
of course,
specifically,
of course.
But I use Keeping Current Matters. It's something I look at every single day just to keep up to date. But let's first talk about appreciation and depreciation. So, like, as of right now, again on a national scale, it's anticipated that in 2023 You're going to see some depreciation on home values, but just minimally in 2023. Again, could vary market to market. But over the next 5 years, we're going to be looking at homes appreciating in value up to roughly 4.5%. So keep that in mind. So what I did is I just put together a very quick example, right? So we buy a home for $400,000. We see a little bit of depreciation in the first year. And then over the next 5 years, we overall see appreciation of roughly 4.5%, which puts your home value at roughly $450,000, just for round numbers, right? So over that time period, you have already gained $50,000 in equity on a property that you've owned. Plus, keep in mind, any of the money that you're paying each month over that 5-year span is additional equity that then is building your overall wealth. So that does kind of put together, again, big scale, big picture, but it is quite the vehicle to use in terms of growing your personal wealth.
I would try to keep in mind, because we have our home, we've done a good job getting good equity in it. And I have to remember, if everything goes awry, you can always sell your home and you got all that money coming back to you. Like, I got to keep that in mind. I know that's not the goal. You can use it for other things.
Yeah, for sure.
But I think people forget about the equity that you have in a home. And, they say you're either paying someone else's mortgage with rent or you can pay your own. Yeah, it might take a little to get that home initially, but people don't realize you're building that wealth within it.
Right. At that point, it's just understanding perspective, because to your point of renting versus buying, renting, yes, you have a space that's your own. You have pretty much, everything taken care of. There's no yard work, but it's a space that is your own. But in terms of your future and your financial goals, whatever they may be, really one of the best assets is buying a home for long-term wealth development for your personal life.
So let's talk about buying a home, shall we?
Yeah.
Like I said, you can use this for your first time home buyers. So what are some tips to successfully buying a house with the process?
Yeah, for sure. So anytime I get to interact with someone who is just genuinely curious, I always say, just start the conversation. There is nothing wrong with just asking questions. I feel like sometimes, whether it be fear, hesitation, or questions, I feel like sometimes people can get caught in that space. But instead, just reach out. Let's have a conversation. Let's see what it sounds like. I genuinely think that's the first step. If you wanted to go one step further, I truly believe in an application itself. But, as much as that might sound like a sales pitch, honestly, let's be real. I just like to take a holistic financial analysis approach. Now, I'm not a financial advisor, don't get me wrong. But when I have the ability to take someone's financial situation and goals on paper, it gives me the ability to the term I use is open up the playbook. Let's take a look at a lot of different options. Like what are your goals other than, just buying a house? So again, I think just starting the conversation and putting numbers to paper is such a vital step. Just have the conversation. It's not that deep.
One of my favorite questions when I was a full-time lender was, so how much do you cost? How much does this cost? And best answer, nothing.
Yeah, exactly.
It really,
exactly.
There's not much involved as far as an investment goes until you are under contract.
Right.
And we'll talk more about real estate agents here in a little bit, but even that side of it, and I think it's good because this is a huge investment. There's a lot of moving pieces, but to say I can get my qualification or my pre-qualification going into it, I've got an agent that I can work with. Just for all the listeners, that part's free. That's what we need, that to get you to the end game here.
Yeah, exactly. It's not like a phone call with me is $50. It's nothing like that.
Not yet, huh? Fancy pants.
Hey, I'm not getting myself out there.
Any other tips? Any other ideas on the process?
I don't, that's just the front end of it, but I just feel like that's the most vital piece is starting the conversation. But for what it's worth, have conversation with friends and family.
I would agree.
Do that. Did you deal with people that have gone through the process themselves? There is some value there. Don't get me wrong. So start the conversation, do a little bit of homework, but ultimately put some numbers to paper.
Good. So first time home buyers, I'm on my second home, so I don't fall into this category anymore. But I once was a first-time home buyer, and my wife did all the work. I was an idiot. And I just kind of rode along with it and was like, yeah, this sounds great.
Told me that one before.
No, yeah, I had minimal involvement because it was her parents, my parents that were kind of saying like, yeah, you should buy a home. And I really didn't think much of it. I was happy in my little apartment. And so we were first time home buyers, and there was a lot going on then. There's credits, there's tax credits, there's home buyer assistance. There's so many pieces, and I will reiterate have the conversation, because it is not a buyer's responsibility to know all the options. It's the loan officer. It's our opportunity to educate them and say, after looking at everything, I feel this is what's going to get to your goals. This is what's going to help you get this home. So there's a couple specific ones that we want to touch on today. The first one is going to be, and I got to read it, the first time home buyer, Federal Home Loan Bank. Now, can I share my story about you and me in this?
Yeah, absolutely.
Okay.
Please.
So I can't help but stay up in the mortgage world and the real estate world. And so I'm scrolling through Facebook, and some real estate agent, this is like 9-10 at night, some agent had posted that there's this new program and you could get a tax credit. And I don't know, this was kind of the first one I had seen in a while, because during COVID, you really didn't need a lot of credits. I mean, we had NIFA, but that was about it. And so I texted Brandon late at night. I feel bad. I'm like, hey man, sent a screenshot. I'm like, is this real? And he responds back and he goes, yeah, I've got an email I can send you on it. I just got the information. So let's talk a little bit more about that, because this is truly kind of like way back in the day, that $8,000 tax credit. So break it down a little for us.
Yeah, so it is a grant program. So once a customer is under contract on a new home, then you can apply for an additional grant up to $7,500 to help with your down payment and your closing costs. And with that, I reiterate, once you're under contract, because I think sometimes we can get out in front of the horse, if you will.
Right.
So once you're under contract, you can apply for that. So there are some income limits that come with that. In Douglas and Sarpy County, the income limit is $76,100. Now that is total house income.
Mm-hmm.
So, for example, if you are buying a home just by yourself, but you're going to have a roommate, that roommate's income has to be taken into consideration, because they will be living in the household with you. And that goes towards that $76,100 threshold that applies for a household from 1 to 4 people.
Okay. And so within that income bracket, are there other requirements they have to meet within that debt to income, kind of like your traditional borrower?
Yeah. So, I mean, it still has to like qualify based on like normal mortgage underwriting practices. But there is, like, it can be used with NIFA. It can be actually used with our core bank affordable housing program as well, which we'll also talk about.
That we will.
But so there are a couple of details with that. But the way that I approach it, for what it's worth, is I like, with my customers, I think it's a great program. Mm-hmm. Don't get me wrong. But when I approach my customers with it, I say, hey, this is what the picture looks like for you financially in your goal to purchase a home, just you. Now, because you have to be under contract to apply for the grant program, I like to personally use it as a bonus feature.
Cool.
So, I don't like to oversell and underdeliver. Does that make sense? So I don't want to come to a client and be like, yes, you can get this grant money and you will be helped with your down payment and your closing costs. And then we get to the end, and then we, let's say we make $80,000 as a household. Well, now we got a problem. It's not good for my customers, puts us in a bad spot. So I like to reiterate that. I like to, let's get you into your home based on what you have now, and use this as a bonus feature in the event we can qualify you for it.
Well, it's always nice because, again, huge purchase. People are writing some of the biggest checks they've written for their closing costs, down payment, all those.
For sure.
But to have this opportunity, and I like how you say the bonus, and say, hey, you know what? We've done this all. More or less, you've done this all, borrower, on your own. But I'm going to give you a little kickback here because you fit into these qualifications. I think that's a fantastic way to approach it, because you're right. If you promise them $7,000 and then you can't deliver,
Yeah. That's just my personal approach to it. But everybody does a little bit different. I think it's good to talk about, know that it's out there, but that's my approach personally.
Well, and I think that's the difference between a good lender and a bad lender, or challenging. I don't want to call them bad lender, but there are lenders that don't educate like that. And they will throw things just to get the deal done. And then at the end, it's just a bad experience for the borrower. And here at Core Bank, we have phenomenal mortgage lenders, and they do have the conversation and care. And I don't know many bad mortgage lenders, to be honest with you.
Well, and if you don't mind, I can actually give you a real-time example.
Oh, would love it. Love it.
So I've been working with a client. She got under contract. And I actually didn't bring up the grant program at all, but she was under contract on her home and we were moving forward. Everybody's excited about it. And then I started asking some weird questions just because there's some requirements behind the grant. So I was like, well, maybe I should probably, have a conversation. So I told her kind of what my goal was. And of course she was very excited, and unfortunately that didn't work out.
Okay.
We ran into the income threshold, but it's a real-time example of just, hey, we're accomplishing your home ownership goal. I'm going to try to get this done for you. I'll do everything I can, but I cannot guarantee it. So yeah, that's what's going on live.
Good approach. And I do want to touch on NIFA really quick. And I think Jack and I talked about it a little bit on the last podcast, but that is Nebraska's home buyer assistant program. The previous bank where I was doing mortgages at was very involved with NIFA. And so I got a lot of training on it. Phenomenal program. It does take a bit of work on the lender side to get those through, but it really does. How I always explained it was, there are so many people out there that can afford their rent, and this mortgage is actually going to be less than what they're paying in rent, but to qualify where all the challenges, NIFA makes it a little bit easier to get that done. And they have home assistance or home buyer assistance and all of that.
Yep.
But at Core, we have the affordable housing, the affordable housing loan program. And I know Brandon, sorry.
No, that's all right.
Fowler on the most part.
I've been going by the last name for years.
But Brandon has used this and has gotten a client to the finish line with this. So let's talk a little bit about that, as it's kind of more of that Core Bank product.
Yeah, for sure. So again, I worked with another individual, and I have to plug for the blog post on a Core Bank website back in December of last year. But I was the first loan officer to take advantage of the program.
Awesome.
Had a client that was a great fit. She came to me and we pre-qualified her just like I would for any traditional conventional mortgage. And she said, hey, we need to find a way to up my pre-approval. So I said, okay, all right. Let me see what I can do. Pulled out the affordable housing program that we offer through Core. Was able to take it up. I don't remember for certain. It was 20 or 30,000 on the pre-approval. So the long story short is, up the pre-approval, she found a property with the agent under contract and closed.
Awesome.
And it was a very cool situation, just for a number of details. And then we got to sit down after closing and have a drink or two and just talk about her experience through the home buying process and what it meant to her. It was one of my most rewarding processes I've ever had the opportunity to work with a client on. So I guess I can dive into, you want me to dive into a little bit of the details of that program?
Absolutely.
So I can just kind of bullet it out. So with that program, it's a 30-year fixed rate program. We have the ability to go up to 97% loan to value, where you're only bringing 3% down payment. We have minimal closing costs to, again, alleviate that pressure a little bit as well. But the best part of it is there is no mortgage insurance on the product, which gave in the scenario I just shared, gave us the ability to take the number a little bit higher because, you're saving between probably 70 and 120, wide range there, but 70 to $100 on mortgage insurance. So with that though, there's a home buyer education class. Again, something I looked for feedback directly on because it was an in-person class through Family Housing Advisory Services. And my client had a phenomenal experience with her.
Good.
She said that everybody that even is thinking about buying a house, like granted, she at the time she was like, hey, I have to do this. But she said, even if you're thinking about buying a house, this is a great program to dive into because it brings up the ideas that maybe some first-time home buyers don't think about. There's a number of different examples that we could go into there, but she overall loved the class and had a lot of positive feedback.
I had the opportunity to go present at one of those classes one time.
Did you?
Yep, because I got into mortgages like heavy COVID time. So everything was remote. And then as things started opening up again, they brought me in to talk about the different programs, different loan programs that people can use. There were like 20 people in the class. And I was there about 30 minutes early, and I kind of stayed 30 minutes after my piece just to see what this class was all about. Because I too had clients that had taken it, and they talk about debt to income, they talk about loan to value, a lot of things that I really didn't have on my radar until I was an actual lender. So I would agree, and I wish they could, advertise it more, and they could. I don't really think they should, but it is great for especially a first-time home buyer to go experience this class, because a lot of questions that I heard were covered in the class, and then you're coming in much more scared, and you're going to know what your initial disclosure is all about. And like you said earlier, asking questions, sometimes I think they don't know what questions to ask. And that home buyer program really, or the class, it basically just tells you, hey, here, don't even bother asking. Here's what you need to know.
Yep, exactly. Yep, they do a phenomenal job over there, and I would recommend that to anybody that's even thinking about getting into the process in general.
I would too. All right, so mortgage options, they can be so complex, right?
Yeah, we got a number of different ones.
So many out there, and we've touched on this already in the podcast, but let's look at it again. How important is it to have a reliable mortgage lender and a good relationship with them?
Well, I think it's very important, but I want to put an emphasis on the relationship. I think that since being in this business, I think at a lot of times it can feel very transactional. And something I'm not even a huge fan of myself, but I don't want it to feel that way anytime I have the opportunity to meet with someone. So again, I emphasize relationship, because when you sit down and you're looking through all the numbers and options, et cetera, cash, what you're making, et cetera, I think that can be a vulnerable space for people at times. So forming a relationship with a lender that you truly trust, that you feel like has your best interest at heart is very important. So really, as I mentioned earlier, it just gives us the opportunity to build that, cultivate it, and put you in a strong financial situation to then build your overall wealth.
And I want to do a plug for anybody listening that's looking to buy a home, or maybe a first-time home buyer. If you don't want to answer a question, or if you lie, it generally shows up by closing. I'll give a great example. This is one of my favorite crazy closings I ever had. So if in the state of Nebraska, if you are married, your spouse has rights to the home. So they need to be on the title. That's state law.
Marital interest state.
Thank you. A guy lied to me. He put unmarried on there, and through the whole process was saying he wasn't married. And it was the day before closing, title called me and said, hey, this guy is legally married still. And so I had to come. She had to come and sign the title. I mean, I think they were going through a divorce or whatever that looked like, or she didn't know yet, and just it was coming.
Messy situation.
Kind of. It was very messy. Very awkward closing. One of the worst, most awkward closings. But we had to get her in there and sign the title. And so again, lenders aren't asking because we want to know. Like, I don't really care about a lot of stuff we need to know, but we need to have this for the process, for the file, for the underwriting, so that we follow all the guidelines we have to make a good quality mortgage program. So at the end of the day, everyone wins. Everyone wins. So
I think just open transparency, a wide open line of communication can go so far throughout this whole process, wherever someone may or may not be,
So relationships, right? So we want to put an emphasis on that. What do referrals look like? So I talk to my friends. Oh, you got to get pre-approved first. Don't go look at houses. You got to get the pre-approval. So I find a great mortgage lender like yourself. And I come to you and I say, hey, I'm just getting started. Here's everything you need for the pre-approval. What else do I need through this process? Who else do I need through this process?
Well, it sounds like you're going to need a real estate agent.
Probably. Don't do it on your own, folks.
Yeah. I mean, that's another very important relationship that comes into play in our business. Being a mortgage loan officer, that's really the core of part of our day-to-day jobs is growing and cultivating quality relationships in the community that we serve. So I know for myself, I've got a handful of people that, I've made connections with just over time or already knew that are in the business. With that said, I do think that there is a certain personality type that comes with mortgage, that comes with real estate, that comes with achieving some of these goals for customers. So for what it's worth, I'm very intentional in how I advise my clients on reaching out to specific realtor partners. So something that is very important to me, I just like a grinder grit personality. So that's typically the way that I go.
Good.
Yep.
Well, I always found too, the personality of the client needs to mesh with the personality of the agent.
Yeah, that's very important as well, because if someone is I actually had this conversation about a week ago with someone and they're like, this particular realtor just has similar values, morals, and things of that nature. Well, they're going to jive totally different, than another. I'm glad you brought that up because that's very important.
Well, it makes that referral a little more valuable to the borrower, because now you're able to say, look, I'm going to take good care of you. I'm here. Even when you don't see or hear from me, I'm still here for you. But now that you're pre-approved, I'm going to hand you over to this person and you guys are going to go through the thick of it. I will say one thing I loved as a lender is we didn't have to go show-ins at Sunday night and away from the family. And now, mind you, we might be working Sunday night, getting pre-approval letters and everything. But those agents, for anybody that thinks being a real estate agent is easy and I say fun all the time, once you really learn the industry, it's not. They go through a lot. And they're also then holding the hand through the closing process, which is when we kind of come back in, get all the fine tunes and get the loan done. So I highly recommend taking referrals from your mortgage lenders, because chances are they've worked with those people before, be it a title company, be it the real estate agent. And when the relationships are built, the process is so dang smooth because everyone knows how they work together.
Yep. There's something to be said for just that communication without communication sometimes, lenders know that, hey, real estate agents know, hey, Brandon's got this and he's running with it and if anything comes up, he'll call me.
Yep.
That's basically how it goes.
Yeah. All right. Well, I always like to throw out any final thoughts from the brain of Brandon Fowler to close this out today.
Yeah. I mean, I have a phrase, so I'm going to go the inspirational route this morning. I have a phrase that has kind of stuck with me that just kind of keeps me going through my day to day sometimes, or just in life. Okay. And it's dare yourself to, and you fill in the blank. Whether that is something like your jobs, your personal goals, personal aspirations, things you want to achieve through your hobbies. I just think that growth requires uncomfortable situations, which requires you to put, yourself in a place that you maybe don't necessarily want to be in. But that's a phrase that I like to put out to people, just because I think it carries a lot of weight for growth over the long term. And it's something I try to stick to myself. So
I love
for what it's worth, the crowd can take it with them today.
Well, I'll pull one more for me too, because what do you always say to me? Are you smiling today? Did you smile? What's
you got to keep smiling.
Got to keep smiling.
If you're not smiling, you're doing something wrong.
There you go. And if you're watching the YouTube video, I constantly smile. I tell you that too. I'm like, I've been smiling all day. My cheeks hurt.
I know. I get there myself sometimes, especially doing stuff like this. When we get to do stuff like this, it's too fun, man.
It's good. It's good. All right. Well, thank you again, Brandon, for your time today. Love having you on the show. You brought a lot of great value. And I know as far as you in the space, you are definitely a giant asset for the bank and for all of your borrowers and your real estate partners. So,
well, thank you very much. I appreciate that
feedback. To have you. For more information on the Core Experience podcast, you can go to corebank.com/podcast, or you can always email coreexperience@corebank.com if maybe there's a bank topic or something you want us to touch on here at the show. I'm always willing to be open for a special guest or things I don't know about, and I'll do a little research and put something together for you. So, as always, Brandon, happy to have you on here. The other Brandon, your host today, happy to have you listening, and I look forward to talking to you on a future podcast.
Thank you for listening to the Core Experience, your connection to community, business, and the people who make it all happen. For more details, go to corebank.com/podcast or email coreexperience@corebank.com. Brought to you by Core Bank, member FDIC. Annual percentage rate, APR, effective as of June 2nd, 2023. A $200,000 mortgage at 6.490%, APR 6.685% on a 30-year fixed equals $1,262.82 per month, principal and interest payment, or a $200,000 mortgage at 6.625%, APR 6.723% on a 30-year fixed equals $1,280.62 per month, principal and interest payment. Monthly cost does not include taxes and insurance. Actual payment obligation will be greater. Core Bank is an equal housing lender.